Hi there. Over 15% of quarterly VAT returns are rejected for simple mistakes. In this video, I'll show you how to file correctly in 2026 and avoid HMRC's automated rejection system completely.
What if I told you that a simple, honest mistake on your quarterly VAT return could land you a penalty of up to 15% of the tax you owe? It's a surprisingly common and really costly problem for thousands of UK business owners. That's exactly why the experts over at My Tax Accountant, one of the UK's most trusted accounting firms, have put together this guide. We're going to walk through how to file your 2026 quarterly VAT returns with total confidence and, most importantly, avoid those stressful rejection notices from HMRC.
So, let's talk about that 15%. Under HMRC's penalty system, if you repeatedly submit your returns late, you can trigger surcharges that climb pretty fast, maxing out at a hefty 15% of whatever VAT you owe for that period. And that's before you even think about late payment interest. But honestly, it's not just about being late. A huge number of returns are instantly rejected by HMRC's computers for simple, totally avoidable errors. This just causes a massive amount of unnecessary stress, and, it can pose a real risk to your cash flow.
Look, if you're staring at your numbers and feeling a bit lost in a maze of deadlines, complicated forms, and rules, you are absolutely not alone. It doesn't matter if you're running a small cafe in Manchester or you're a freelance developer in London, VAT can feel properly confusing and stressful. And it takes valuable time and energy away from what you should be doing, running your business. But the good news is, it really doesn't have to be that way.
This guide from the team at My Tax Accountant is all about turning that anxiety into a feeling of control. It's a clear, straightforward path through the whole process. The goal here is simple: to give you the clarity to understand what you're doing and the confidence to nail it every single time, one step at a time. Okay, so here's our game plan. First up, we'll look at the most common reasons returns get rejected. Then, we'll walk through 3 absolutely crucial steps: getting your preparation flawless, filling out the form the right way, and finally, submitting and paying. And to finish off, we'll look at how you can mistake-proof your future returns and what to do if a little error does manage to slip through. Right then, let's jump straight into Section 1. Why do these returns go wrong in the first place? Honestly, just understanding these common slip-ups is the first and most important step to avoiding them. Let's have a look at the top reasons HMRC's automated systems might reject your return before a human even sees it.
Now, what's really fascinating here is just how basic most of these errors are. I mean, an incorrect VAT number, that could just be a typo. Filing for the wrong period is another classic. Picking the quarter ending in June instead of March. And authentication errors, that's often just forgetting your password for your government gateway account. You'll want to hear this part. Since making tax digital became the law, using software that isn't MTD compatible is a guaranteed instant rejection. The great news? Every single one of these is so easy to avoid with the right process.
So how do we avoid all those problems? Well, that brings us right to Section 2, flawless preparation. I'm not kidding when I say getting this part right is half the battle won. A bit of discipline here makes everything that comes after it so much quicker and easier. This is where you build the foundation for a perfect return.
So, what do you need to get together before you even think about logging into your software? Make sure you have every single one of these documents ready for the VAT period. We're talking all the sales invoices you've sent out and all the purchase receipts for things you've bought. And here's where people often get tripped up. Don't forget any credit notes, because they directly change your sales and purchase numbers. And a huge tip from me, if your bank account isn't fully reconciled with your books, just stop, do that first. Unexplained transactions are basically where mistakes are born.
Now, this is a really crucial point you cannot afford to ignore, especially as we're in 2026. Making tax digital, or MTD, isn't just a suggestion, it's the law, and it's completely woven into how HMRC operates. Since way back in April 2022, every single VAT-registered business has to keep digital records and use MTD-compatible software that talks directly to HMRC. Remember when we listed non-compatible software as a top rejection reason? Well, this is exactly why. The days of just typing numbers into the HMRC website are long, long gone.
Right. Here is a vital tip from the team at My Tax Accountant. This one catches so many people out. That £85,000 VAT registration threshold, it isn't based on your accounting year. It is a rolling 12-month period. What that means is, at the end of every single month, you need to look back at your total sales for the previous 12 months. Think about it. A startup in Birmingham could have a quiet start to the year, then land a massive project. They might cross that threshold in October, but not even realize it until their year end in March. By then, they're late to register, and they could be looking at penalties.
All right, with all our prep work done and dusted, let's move on to the main event in Section 3,
actually filling in the form itself. The VAT return has 9 boxes, and I know it can look a bit intimidating when you first see it, but don't worry, we're going to break it down into a simple, logical process that makes complete sense. Before we get into the nitty-gritty of the boxes, let's just simplify the main idea. The best way to think about your VAT return is like a playground seesaw. It's all about balancing 2 key things. On one side, you've got the VAT you've charged your customers, that's called your output VAT. And on the other side, you've got the VAT you've paid on your business purchases, your input VAT. The whole form is just a structured way of figuring out the difference between those two.
So it all boils down to this 3-step calculation that your software is doing for you. Step 1, it adds up all the output VAT from your sales invoices for the quarter. Step 2, it adds up all the reclaimable input VAT from your business expenses, and I say reclaimable because you can't always claim back everything. And finally, step 3, it takes the input total away from the output total. That final number is either what you owe HMRC or what they owe you back as a refund. Simple as that.
Okay, so there are 9 boxes, but let's not get stressed about all of them at once. Let's just focus on what the pros call the big 3, because these are the ones that really matter. You've got box 1, which is your total VAT on sales, then box 4, which is the VAT you're reclaiming on your purchases, and then the big one, box 5. That's your bottom line. It's the final result, and it tells you exactly how much you need to pay or how much you're getting back.
Okay, let's quickly run through these key boxes. So as we said, box 1 is the total VAT you've charged. Box 4 is what you're getting back. Box 5 is that net result. Then you've got box 6 and 7, which are also really important for checking your work. Box 6 is the total value of your sales without the VAT. And box 7 is the total for your purchases. It's really important that the figures in box 1 and box 6 make sense together. For most businesses in the UK, your software will handle the other boxes automatically, so getting these 5 spot on is the absolute priority.
Here's another brilliant tip for a final check before you hit submit. These are the kinds of habits the pros have that stop costly mistakes. First, have a look at the balance sheet in your accounting software. Does the final VAT figure on your return match the VAT account on that balance sheet? It should. Second, do a quick sense check. Divide the VAT in box 1 by the net sales in box 6. If you only make standard rated sales, that number should be 0.2 for 20%. If it's something weird like 15%, it could mean you've miscoded some sales. And finally, just have a quick scroll through the transaction list your software used. You'd be amazed how often you can spot something that just looks wrong, just by eye.
Right, we're on the home stretch now. Let's get into section 4, which is all about the final actions, submitting the return and making that payment. Getting the numbers right is only half the job. And stay with me here. This next point about deadlines affects nearly every small business in the country.
So the crucial thing to remember is the deadline. You have to submit your return and make sure your payment has actually cleared into HMRC's bank account 1 calendar month and 7 days after your VAT period ends. So for a quarter ending 31st of March, your deadline is the 7th of May, and that is a hard deadline. Don't leave your payment until the very last afternoon because bank transfers are not always instant. I'd always suggest allowing at least 1 full working day for that payment to go through.
And this table here shows you the pretty harsh reality of getting that timing wrong. If you're late, HMRC can issue something called a surcharge liability notice. If you're late again while that notice is active, the penalties start to kick in. And as you can see, they escalate very, very quickly. A second slip up gets you a 5% surcharge. By the 4th time, you're hit with that full 15% penalty. For a business with a £10,000 VAT bill, that's an extra £1,500 just for being late. That's a cost no business needs.
And here's a little compliance point that lots of business owners forget about. Your job isn't done when you click Submit. HMRC legally requires you to keep all of your digital records. That's every sales invoice, every purchase receipt that backs up your VAT returns, for a minimum of 6 years after the period they relate to. They do this so they have a clear audit trail if they ever decide to investigate one of your returns. So please make sure your digital filing system is robust and securely backed up.
Okay, and finally, we've arrived at section 5. Look, we all try to get things perfect, but sometimes mistakes just happen. This part is all about what to do if things do go wrong. Knowing how to handle errors the right way professionally can make a huge difference to the final outcome.
Let's talk about Tom's real-world situation. He's a busy freelance web developer juggling loads of clients. He just completely forgot to include one project's invoice in his VAT calculation. It was a genuine oversight. But the result wasn't just the £1,200 VAT bill he owed. It was the stress of getting that official brown envelope, the worry about what penalties might be coming, and all the time he had to sort it out. It just goes to show how a seemingly small mistake can have a really big impact. So if you do find a mistake on a return you've already submitted, the first thing to do is not to panic. And definitely don't just ignore it and hope it'll go away. HMRC is always much more reasonable with people who are upfront about things. As you can see here, for smaller errors, and the general rule of thumb is where the net tax value is under £10,000, the process is actually quite simple. You can usually just adjust for it on your next VAT return. For anything bigger, or if the error was deliberate, you have to formally tell HMRC about it straight away. Being proactive almost always leads to lower penalties if you get charged any at all.
I really hope this step-by-step guide has given you a much clearer framework for tackling your VAT returns. But for that complete peace of mind, sometimes you just need an expert to take a look at your specific situation. If you'd like to speak with a professional team at My Tax Accountant, you can reach them on 020-8570-8531, or you can email them at info@mytaxaccountant.co.uk. Please do remember, this is for general guidance only. You should always seek professional advice that's tailored to your business before you take any action. And for more practical guides just like this one, make sure you subscribe to the My Tax Accountant YouTube channel. Thanks so much for watching.